Hey there. Welcome to the channel. So, you've heard about the stock market, maybe on the news, from a friend, or scrolling through social media, and you're wondering, how does this thing actually work? How do people get started, and more importantly, how do they make money from it? Well, even if you know absolutely nothing about investing, don't worry, you're in the right place. In this video, we're going to break it all down in a clear, simple, and super practical way. Let's dive in. Section 1. What is the stock market? Imagine the stock market like a big supermarket, but instead of buying bread or rice, you're buying small pieces of companies. These small pieces are called shares or stocks. When you buy a stock, you become a part owner of that company. Yes, even with just one share, you own a tiny slice of the business. If the company grows and makes a profit, the value of your share can go up. And if they do really well, they might also pay you a reward called a dividend, kind of like saying, thanks for believing in us. To know which companies are worth buying, you need to check their financial statements, just like checking a product's label before you buy. Look at their income statement to see if they are making profits, the balance sheet to see if they are financially healthy, and the cash flow statement to see how they manage money. For example, if you were thinking of buying shares in Zenith Bank, you'd want to see consistent profits, low debts, strong cash flow, and a history of paying dividends. You can find this info on the Nigerian exchange website or finance apps, helping you make smarter decisions, because in the stock market, doing your research means picking the best stock for your money. Section 2. How does the Nigerian stock market work? In Nigeria, the main place where stocks are bought and sold is called the Nigerian Exchange Group, NGX. This used to be called the Nigerian Stock Exchange. Think of Nigerian Exchange Group as the official market platform where companies list their shares and investors like you and me can buy or sell them. These companies include big names like GTCO, Guarantee Trust Bank, Zenith Bank, Dangote Cement, MTN Nigeria. They are what we call publicly listed companies. They allow the public to invest in them by selling shares. The Nigerian Exchange has trading hours from 9:30 a.m. to 2:30 p.m., Monday to Friday, excluding public holidays. Section 3. Why should you invest in stocks? Here's why the stock market is worth your attention. 1. Grow your wealth over time. Historically, stocks outperform savings accounts and inflation. If you invest in the right companies, your money grows with them. Imagine you put 10,000 naira into a savings account that earns little interest. Your money grows slowly and might barely keep up with inflation. But if you invest that same 10,000 naira in strong, growing companies through the stock market, your money has the potential to grow much faster over time. For instance, many investors who bought shares in companies like Nestlé years ago have seen their investments multiply several times over. This is how investing in stocks helps you grow your wealth beyond just saving. 2. Passive income through dividends. Imagine you buy shares in a company like Zenith Bank. Not only can the value of your shares increase over time, but the company may also pay you dividends, which is like getting a regular bonus just for owning their stock. These dividend payments can come every year or even every few months, providing you with a steady stream of passive income without having to sell your shares. It's a way to earn money while you sit back and watch your investment grow. 3. Ownership. When you buy shares in a company, you're not just putting your money somewhere, you actually become a part owner of that business. That means you have a stake in their success, and sometimes even a say in important decisions through voting rights. It's like owning a small piece of a big, real company, giving you more control and opportunity than just saving money in a bank. That's the power of investing. 4. Easy to start. You don't need thousands or millions to get started in the stock market. With apps like Afrinvestor 2.0, Bamboo, Choka, or Trove, you can begin investing with as little as 1,000 naira, right from your phone. No complicated paperwork or big banks needed. Just download the app, pick the stocks you like, and start growing your money bit by bit. It's never been easier to become an investor. 5. Long-term security. Imagine you start investing just 10,000 naira every month in solid company like Guarantee Trust Bank and keep it up consistently over 20 years. With time, as these companies grow and your investments earn returns, your money can multiply significantly, potentially giving you enough to retire comfortably or fund big life goals like buying a home or your kids' education. That's the power of long-term investing, building financial security and peace of mind for the future. Section 4. How to start investing in Nigeria. Step 1. Choose a stockbroker or app. To start investing, you need a stockbroker license by the Nigerian exchange. But don't worry, technology has made this super easy. You can now use user-friendly apps like Afrinvestor 2.0, AIM, Trove, Bamboo, or Choka. These apps let you open an account in just a few minutes, fund it directly from your bank, and begin buying shares right from your phone. No hassle, no long paperwork. It's investing made simple and accessible for everyone. Step 2. Fund your account. Start small. You can begin with just 5,000 naira or 10,000 naira. The key is consistency, so even if you can only contribute 1,000 naira each month, it will add up over time. Regularly adding to your investment helps you build wealth steadily without feeling overwhelmed. Remember, every little bit counts. Step 3. Do your research. To research a company effectively using its financial statements, start by reviewing its income statement for revenue, expenses, and net profit, the balance sheet for assets, liabilities, and equity, and the cash flow statement to understand how cash is managed across operations, investments, and financing. Key profitability ratios like net profit margin and return on equity reveal how well the company generates earnings, while dividend metrics such as dividend yield and payout ratio show how shareholder-friendly it is. Use tools like the Nigerian exchange website and finance apps to access and compare this data against industry benchmarks. Step 4. Buy your first stock. Once you've done your research and feel confident, it's time to take the leap. Buy a few shares of a company you believe in. It could be something familiar, like GTBank, MTN, or Nestlé. And just like that, you're officially a shareholder. You now own a piece of a real business, and your journey as an investor has begun. Section 5. Types of stocks you can buy. There are different kinds of stocks, but here are two basic categories. 1. Blue chip stocks. These are big, stable companies with a track record of doing well. Think MTN, Dangote Cement, Zenith Bank. They usually pay dividends. 2. Growth stocks. Smaller companies with potential to grow fast. Riskier, but they can bring high returns if they succeed. You can also invest in ETFs, exchange-traded funds. These are bundles of multiple stocks in one. For example, the NSE 30 index fund tracks the top 30 companies in Nigeria. This spreads your risk across different industries. Section 6. Risks you should know. The stock market is not a money-doubling machine. It has risks. 1. Prices go up and down. Stock prices change all the time, and that's completely normal. Just because a stock is rising today doesn't mean it won't drop tomorrow. The market moves based on news, company performance, the economy, and even emotions. So don't panic when prices dip. Investing is a long-term game, and smart investors focus on the bigger picture, not daily ups and downs. 2. Market crashes happen. Sometimes, the entire stock market takes a hit, like during a recession or major global event, and prices drop across the board. This is called a market crash. It can be scary, but it's a normal part of the investment journey. The good news? Markets have always recovered over time. The key is to stay calm, avoid panic selling, and think long-term. Crashes may hurt in the short run, but they often create opportunities for future growth. 3. Company-specific issues. Not all stock drops are caused by the overall market. Sometimes, a company's own problems can bring its share price down. For example, if a company reports poor earnings, loses a major customer, or gets caught in a scandal, investors may lose confidence, and the stock could fall. That's why it's important to research the companies you invest in and keep an eye on their performance. A strong company can bounce back, but some may not, so stay informed. How to manage risk. Investing always comes with some risk, but you can protect yourself by being smart about it. First, invest for the long term. Think 3, 5, even 10 years. Time helps smooth out the market's ups and downs. Second, diversify your portfolio. Don't put all your money into one company or industry. Spread it out so if one stock falls, others can balance it out. Finally, only invest money you won't need right away. That way, you won't be forced to sell during a dip and can let your investments grow over time. Section 7. Simple strategies for beginners. Here's how to invest smart as a beginner. 1. Start small. Begin with 1,000 naira to 10,000 naira. Learn by doing. 2. Invest consistently. Set a monthly amount to invest. This smooths out market ups and downs. 3. Focus on dividends. Choose companies that pay regular dividends. These give you income even if prices don't rise quickly. 4. Think long-term, don't rush to sell. Let your money grow. 5. Reinvest earnings. Use dividends or profits to buy more stocks. Section 8. Stay updated. To become a smart and confident investor, staying informed is key. The stock market changes every day, and being updated helps you make better decisions. Start by visiting the Nigerian exchange website to check official news and stock data. Follow trusted finance blogs and YouTube channels, yes, like this one, for tips and insights. Most investment apps also send real-time updates and market news to your phone. And don't forget, you can read the annual reports of the companies you invest in by simply visiting their websites. It's all public info, and it gives you a clear view of how your money is being managed. It's not as scary or complicated as people make it seem. With the right mindset, a bit of patience, and consistent effort, you can start building wealth right from your phone. If you found this video helpful, don't forget to like, subscribe, and share it with a friend who needs to start investing today. And let me know in the comments, which stock or company are you thinking of investing in? Thanks for watching, and see you in the next video.